You know, we have an eclectic roster of guests on this program, and we follow up Cornell West with Doug Flynn, certified financial planner and co-founder at Flynn Zito Capital Management. So a little bit of everything on the show today. So, by the way, inflation is still a story, right? Because we woke up this morning and all the headlines said, all right, we'll have inflation under 3%, and that's not what we saw in this report. That's why the market's down, right?
Yeah, the expectations were clearly there that everything was smooth sailing, and as we've discussed, anything that disrupts that's going to shock the market a little bit because it kind of built that in. So you get some higher than expected inflation numbers, and now everybody's questioning whether or not the Fed is going to be able to reduce interest rates as quickly or as soon as they originally thought. So that means let's take some profits from the all-time high.
All right, so that's very simply explained because that's exactly what happened today. You take a little profit after you've been up this much, and the market has been on a great run. We've covered that day in and day out. I do want to give you time to, because it's Tuesday, for Doug Flynn's Tax Tip Tuesday. So, all right, let's talk about this. So our audience is all over it. They're learning a lot every week from the great Doug Flynn. What do we learn this week? What's the tip?
So today I wanted to talk about people who either are self-employed or have their own business, or even I'm getting a lot of questions from clients if they have a side hustle. So it's like money that you might earn with a 1099 income, you know, you drive an Uber or whatever you do on the side. Anything that's self-employment income, you can do a special kind of retirement plan. And so, you know, the first one to think about is called a SEP.
Okay.
It's called a SEP-IRA. And so that stands for Simplified Employee Pension. And so basically what that means is if you take your gross earnings from your side hustle or your self-employment, and then you take your expenses, you can take about 20% of that and put it away into a retirement plan. And the best part about this type of retirement plan is that you can actually go back and do it for 2023 still. You can do it up until the time you file in April, or if you file an extension, you could actually do this all the way to October. And so it's one of the few things that a lot of people file extensions, and they might want to save a little more money on taxes. They have more time to put money away into a SEP. And so that's the first thing you want to look at in any of your self-employment income.
Yeah,
and then you can
different. Yeah, it's different than people who are working as salaried employees and things like that. So SEP is the word to know this year. It's kind of the word of the day or the word of the year if you're self-employed.
It is.
A lot of people do have these side hustles.
They do, and it's an expanded version. It's on top of what you're doing at your 401k. It's on top of what you might be doing in your IRA, and you get a much higher contribution limit and save some money on taxes. And then if you have a couple of employees, because the SEP doesn't allow you to really do it for employees, and if you do, you have to match the same percentage. So a lot of people don't want to do a SEP if they have employees. You can do a simple, and the whole point of the simple is a very inexpensive sort of 401k light, if you will. It is a lower allocation that you can put away, about $16,000 a year instead of the higher limits on a 401. You do a small match. It's very inexpensive to administer. So people that have a few employees and want to compete with other companies that have 401k plans, a lot of times they lose employees because their competitor has a retirement plan. So you can look to setting up a simple. Those are two of the first ones you want to look at. Okay. And then you can graduate into a single K or a solo K. And so that's, if you're a single person, again, you have to set this up for this year. You can't go back, but it has all the same high contribution levels of a 401k, but you can't have any employees. And so it gives you a much higher contribution level at a smaller amount. So quickly, if you make $20,000 from your side business, you could actually put it all away into the single K. With a SEP, you can only put away about $4,000. So a lot of people like the single K.
All right, and that's, you could see why. That makes a lot of sense. So
exactly.
Is that the last? That's the last point then, though, on that.
The only other one, is then a traditional 401k for companies that have more employees and are willing to spend money on a third-party administrator and spend a couple $1,000s a year. Then you get into a real formal 401k like the big companies have. But these other ones you can do as a small business or a 1099, and the SEP is the easiest one to do for last year. But there are things to look at because you could save a lot of money if you have that side money and you want to put it away. Because I always say if you sacrifice a little bit now, then you can, if you live below your means now, you can live above later on. Right. If you're gonna live above your means now, you're gonna live below it later on.
That's it. That's the key to the whole thing. It's harder to, easier said than done, as they say, for a lot of people. But if you can do it, you'll be happy later on. Doug Flynn is always very good, and a terrific Tax Tip Tuesday. We'll see you soon. We'll have more tax tips next Tuesday. This hour,